All right, guys, here is the Bitcoin 1 hour lead chart. After we dumped a good 10%, it looks like there's a little consolidation here. So what are we trying to do? Well, we're trying to figure out whether this is a Wyckoff schematic by any measure. And we can see the preliminary support here. You can actually see it much more clearly if we go temporally on a lower scale. Right, we have the preliminary stop, which is basically the price action is trying to be stopped, the downward movement, and it fails continuously until it hits the selling climax down here. Then it bounces back with the AR, the automatic rally, and then this creates the most important range, your trading range. Everything after is related to this range, how you can tell whether it's going to plan or not going to plan. So it's very important. You need to figure out which one's the selling climax and where the AR is. Right, sometimes you can't figure it out because it's still developing. But this one seems to have developed fairly quickly. Now, let me actually just take that again. All right. So it looks like, at least so far what's developed, this would be the secondary test, right? And another secondary test without breaking through. And it's going back up. Or this could have been already 3 pushes down. It's not the best looking one. Usually you want... usually you want this part after the second push to go back at least 50%, and it kind of did into the trading range. So it could be already over. How are we going to differentiate whether it's over or the schematic is still building itself? Because relative to the schematic, if we're correct, we should be going to this area where it tests the AR or goes above it a little bit, right, to wipe out the liquidity here. Well, if it goes past this point, you're going to wait, and if it enters the trading range again, you know the 3 strikes wasn't it, and the schematic is building. So wait until it goes up, and if you see it coming back in and it doesn't get rejected off of here, then we're dealing with the schematic, and I'm going to short from here. All right, I'm going to short and expect it to go all the way down, basically to this point, or a little bit further to wipe out all this liquidity here. That's my next step. I don't want to carry on too much. Let's do something like this, right? I'm going to place it behind that. What is that, 0.25? I can do maybe a little more. Put it behind these wicks. All right, put it behind these wicks as well. And I would, there's not many, there's really no imbalances down here. So if it does move back in, it's with intention. There's really no imbalances at all down here. Nothing. There's literally no balances. So if you see it going down here, it's with intention. If it breaks back into it, goes out, breaks back into it, it's with intention. I'm going to set my stop loss basically here. Probably around this area. Maybe actually right here. Boom. Just to make sure, right? That's a 5-to-1 risk reward. That's what I'm taking on Bitcoin. Let's go to Ethereum. With ETH, it's very similar. Okay. It would have to be this. ETH, it's a little bit harder to define right now. There's really no structure building other than this spike down and then expect maybe something like this, right? So I would expect for it to either bounce off this line or this line right here, maybe even this. Right, if you see something like this, then I would imagine it's a reversal pattern and we're going back up, but there's nothing concrete there. Bitcoin is much more visible. Right now, this is my plan. I'm waiting for it to break out of the zone and back in, then I'm shorting from here. Let me know what you guys think. I'm gonna keep up on this just so we can see as the structure builds a little better. And we'll talk more about the larger scale after this, because we've clearly had a large structure forming right here. And we can expect a third touch, very similar to down here, right? But we'll talk about that in the next video.